Professor G-Man Lopo.
Alright, so we are now here, in the next topic, which is the cash break-even point. Alright, your operating leverage, your financial leverage, and your total leverage. So it is more on the leverage, and also the next topic is all about the cash break-even point. Okay, so when you say about cash break-even point, so if you remember in our discussion, in our in the CVP analysis, we be able to compute for the break even. All right, ano nga yung break even point? We say that the break even point is that your net income is zero. Okay, wherein in the cash break even point is that your sales, your break even sales is equals to your total cost, right? Break even point is equals to your variable cost plus fixed cost. Your CM is equals to the fixed cost, or in terms of your cash or your break-even points, that net income is zero. Alright, so ano bang ibig sabihin, class, if it is now your cash break-even point? So what do you mean here of your cash break-even point? So if the firm has the minimum of available cash, or the opportunity cost of holding excess cash is high, management may want to know the volume of sales that will cover all cash expenses. Please take note of this. So meaning, class, in terms of the cash break-even point, only your cash transactions only. Meaning to say, we will be able to deduct, all right, some of the expenses, na non-cash transactions. Okay. So in terms of this one, in the cash break-even point, please take note, not all fixed operating costs involve cash payments. For example, depreciation expenses are non-cash charges. So to find the cash break-even point is lower than the usual break-even point. Again, ibig sabihin, class, daw, in terms of the cash break-even point, mas maliit daw ang ating break-even point, because if you notice in this formula, fixed costs minus depreciation is equals to your contribution margin per unit. Anong tawag doon? That would be your cash break-even point. Alright. So, for example, Wayne Company manufactures and sells doors to the home builders, and the doors are sold for 25 pesos each. And you have also here variable costs are 15 door, and your fixed operating cost totaled 50,000, including the depreciation in the amount of 2,000. Alright. So in terms of this one, class, in the cash break-even point, if you notice, fixed cost minus depreciation is equals to your contribution margin per unit. Very good. Okay. So ano bang nangyari dito, class, diba? In the break-even point na ating diniscuss last time, only the 50,000 divided by the CM per unit of 10. But now, since the question in the CPE board exam is the cash break-even point, anong gagawin natin? We will minus the depreciation. Alright, so in terms of the cash break-even, the answer here is at 4,800. Okay, go back to our discussion. Anong ibig sabihin, class, ng 4,800? It means that if you sell 4,800, your cash break-even point is 4,800, meaning net income is zero. But you will minus non-cash transactions. Please be careful, in terms of your cash break-even point wherein you will minus your depreciation. Very good. Okay. Next one is all about operating leverage. Okay, ano ba yung operating leverage if you notice? Diba? Operating leverage is a measure of your operating risk arising from your fixed operating cost. Please take note of the term operating leverage is a measure of operating risk and arises from your fixed operating cost. So a simple indications of this operating leverage is that is the effect that a change in sales has on earnings. Kaya nga, class, yung pinakaunang formula in terms of operating leverage is the percentage in terms of EBIT divided by percentage changes in sales. Alam natin that in terms of the operating leverage, the formula here is contribution margin, diba? Divided by your net income. Yes, that's your number 2 formula. Diba? If you notice, sales price minus variable cost per unit to be multiplied by the volume. Anong tawag dyan? That's your contribution margin. Okay, divided by selling price minus variable cost per unit to be multiplied by the volume minus your fixed cost. Anong tawag dyan, class? That would be your net income. Kaya nga, class, again, the formula for the operating leverage is contribution margin divided by your net income. But in terms of other formula, it is the percentage changes in EBIT divided by percentage changes in your sales. Very good. Okay. So, as previous example, no, in our formula in the CVP, again, operating leverage is a measure of operating risk that arises from your fixed operating costs. So, what is EBIT? EBIT here is the earnings before interest and taxes. Alright, so para at least we can be able to identify, no, the formulas. Alright, also in terms of other formula, no, so again, CM divided by your net profit, or percentage change in EBIT divided by percentage change in sales. Okay, for example, from your previous example, assume that the Wayne company is currently selling at $6,000 per year. So again, we go back to the formula, contribution margin divided by our EBIT. Magkano yung CM in your numerator? 25 minus 15. 25 here is your selling price minus 15 of the variable cost per unit. Just multiply it by 6,000 divided by 25 minus 15. That would be your CM times 6,000 volume minus 50,000 as your fixed cost. Alright, magkano daw, class? The answer here is at 6 pesos. Or sorry, 6 times. Not 6 pesos, 6 times. That would be the operating leverage. Again, please go back to the definitions of operating leverage. What is operating leverage? Or other formula, percentage in terms of EBIT, earnings before interest and taxes, divided by percentage change in terms of your sales. Alright, so that's the formula, class. Alright, so ano ibig sabihin niya, class? So meaning, class, which means that if the sales increase by 10%, the company can expect its net income to increase by 6 times the amount. That's why you have here 60%. Again, we go back to the formula, percentage change in EBIT divided by percentage change in sales. That's why if you have OL of 6, so you just multiply it by 10%. So meaning, class, you will expect that the increase in your sales is 60%. All right. Next one. Very important also is what you call financial leverage. Okay. So kanina, class, our discussion is more on operating leverage. It is the measure of operating risk. But in terms of financial leverage, it is a measure of financial risk and arises from fixed financial costs. Alright. So one measure of this financial leverage is how the earnings per share are affected by the change in your earnings before interest and taxes, or for operating income. Kaya nga, class, in terms of the formula, we go back first. We go muna sa pinaka yung dulo na formula. Financial leverage is the ano yung to, class? SP minus VC per unit times volume minus FC. Ano yan, class? Very good. That would be your net income. Okay. How about in terms of your denominator? SP minus VC to be multiplied by unit times X minus FC minus IC. Very good, class. That would be your net income minus your interest charge. The IC here is what you call interest charge. We'll discuss later ano bang ibig sabihin ng interest charge. Alright. Next one. In terms of your financial leverage, it is the percentage change in EPS, earnings per share, divided by change in EBIT. That's the formula of your financial leverage. Alright. So, as previous example, a while ago, no? So, as discussed also, sabi ko nga, financial leverage is your EBIT, diba? SP minus VC per unit to be multiplied by volume minus FC. Alright? Divided by SP minus VC per unit minus FC. Alright? That would be your net income or EBIT minus your interest charge. Alright? Again, where the EPS here is basically your earnings per share, YIC naman is all about fixed finance charge. Okay. We go now to the discussion. Ano bang ibig sabihin ng tinatawag nating IC or interest charge? When you say about interest charge, that would be the interest expense or you have your preferred dividends. Alright. Again, when you say IC or interest charge, that would be your interest expense and or preferred dividends. Okay. How do we compute for that one? Okay. Walang problema in terms of the interest, no? The interest here is basically your liability to be multiplied by the interest to be multiplied by time. Yun lang, interest expense. But please take note of your preferred stock dividends. Ano sinabi class dyan? It must be adjusted for the taxes. Alright. That's why here, the formula here is preferred stock dividends. Just divide it by 1 minus T. Okay. Sir, bakit ganun? Bakit we will adjust? We assume that the preferred stock dividends is a net of tax. That's why you will gross up, no? You will divide it by 1 minus tax. So that's the formula in terms of your preferred stock dividends. Okay. For example, how do we compute for your interest charge? Example, using the data in the previous example, the Wayne Company has total finance charges of 2,000, half in the interest expense and half in the preferred stock dividends. The corporate tax rate is at 40%. So what is your financial leverage first? So again, the formula here is interest charge is equals to 1,000. What is 1,000? Your interest expenses. Kasi sa 2,000 daw, 1,000 is your interest expense while the other is also part of your preferred stock dividends. Walang problema in terms of the interest. It is basically 1,000 already. But in terms of your preferred stock dividends, it is to gross up. No? That's why 1 minus 0.40. So meaning class tax. So how much now would be your interest charge? 1,000 plus 1,667. Interest charge is 2,667. That would be your interest charge. Okay. Yan. So as discussed a while ago, using the previous example again, if you have 2,000 as half in the interest expense and half as the preferred stock dividends, and the corporate tax is 40%. Again, what is the formula? EBIT minus fixed cost. That's why 25 minus 15 to be multiplied by 6,000 minus 50,000. That would be your EBIT. Tignan mo yung denominator niya, 25 minus 15 to be multiplied by 6,000 minus 50,000. And you just minus 2,667 as your interest charge. Alright. So, anong ibig sabihin yan, class? So, the answer here is at 1.36. So, ano ibig sabihin? Ano yung formula kanina? The formula in terms of your finance charge is the percentage change in terms of the EPS divided by percentage change in EBIT. Sabihin ni class, which means that if the EBIT increases by 10%, Wayne can expect EPS to increase by 1.36 or 1.36. All right. Hopefully, class, you understand, no? The computation for your financial leverage. Okay. Next one, class. Next one naman is all about your total leverage. Okay, so what is your total leverage? So it is a measure of your total risk. Okay. The way to measure your total leverage is to determine the EPS as affected by the change in sales. Okay. Ito class ang formula ng ating total leverage. Percentage change in EPS divided by percentage change in sales. Or, when you say about operating leverage, the formula here is operating leverage to be multiplied by financial leverage. How do we compute for that one? Percentage change in EPS divided by percentage change in sales. Ano yung formula ng operating leverage? Percentage change in EBIT divided by percentage change in sales. Okay? How about naman in financial leverage? Percentage change in EBIT divided by percentage change in EPS, divided by percentage change in EBIT. Again, financial leverage, the formula here is percentage change in EPS divided by percentage change in EBIT. So, mini class, i-cross up nilang yung percentage change in EBIT. That's why the formula of your leverage total is the percentage change in EPS divided by percentage change in sales. Diba? Try nyo yan in terms of your writing. No? You write yung formula. Okay. That's the formula class, ha? Hindi plus, hindi, kasi diba pag if leverage total, it is to be added. No. The formula is operating leverage to be multiplied by financial leverage. Alright. So, meaning to say, class, no, in terms of your total leverage, again, the formula here is that if, yes, diba a while ago we compute for OL of 6, just multiply it by the 1.36 of your financial leverage, and the answer here is at 8.16. So, again, class, in terms of your total leverage, it is the measure of your total risk, and the way to measure it is determine how the EPS is affected by the change in sales. Alright, so again, thank you very much and hope to see you, and hopefully you learned about this subject or about this topic, cash break-even point, operating leverage, financial leverage, and the last topic is all about your total leverage. Again, thank you and see you in my next video. Bye-bye.